The American bond market is amidst an endless rally, with interest rates rapidly rising. The reason behind this is not that the United States is drowning the world in higher interest rates, but rather that the country, with a debt reaching $33.5 trillion, is struggling to find someone to finance its debt. In such a situation, drastic measures are being taken, including potentially flipping the table. In the first video of the week, we will evaluate developments in American stock markets and cryptocurrencies. Let's get started. There's really an unstoppable movement in bond yields. The rise continues, and the pullbacks are quite limited. This week seemed calmer, but everything changed on Thursday night with the 30-year bond auction, which almost received no bids, leading to a sharp rise in interest rates. There's a tweet about it: no one wants to lend to America. This is because as interest rates rise, bond prices actually fall. If you hold U.S. bonds, you may incur significant losses. For example, if you invested in a 30-year U.S. bond 2 years ago and put in $100,000, your investment is now worth only $47,000. This is because when interest rates go up, bond prices go down. So if you need to sell today, you would only have $47,000 left. This high interest rate environment is putting pressure on the average person, especially in the Western financial system. Mortgage costs, in particular, have risen significantly due to high interest rates, making housing the biggest issue within inflation. The relationship between average mortgage costs and an individual's income has reached a point where it's extremely difficult to afford housing. The current situation can be described as stagflation, high inflation alongside stagnation. People are feeling the impact of inflation in their daily lives while the economy stagnates. It's a challenging situation where the cost of living keeps rising, and yet most people are struggling to make ends meet. Mortgage costs are at their highest point, and it's becoming increasingly difficult for people to meet these financial obligations. Therefore, the stagflation is not just a theoretical concept but a real issue for everyday people. However, I've been consistently negative about the Nasdaq for a long time. Why am I so negative? Because there is an effort to manipulate the world through the Nasdaq. The world's economies are indicated by it, and they try to inflate it. The tech companies are making money, but the optimism surrounding them has inflated prices way beyond their actual earnings. At some point, the manipulation has to end. This has happened before. In 2000, prior to the election, we saw this issue, and it played a big role in the stock market crash. The market crashed 2 months before the election. Look at the performance of the Nasdaq versus Treasury bonds. In 2000, there was a massive tech bubble with a 70% plus premium over performance. This optimistic pricing for the Nasdaq can't be sustained indefinitely. There will be a point where things have to balance out. There's always a turning point in such cases. Up there, somewhere, balance will never be achieved. It has to be achieved somewhere lower, with sharp corrections and significant downward adjustments. Let's quickly take a look at the Nasdaq chart. Our trend levels are $15,246 above, $14,884 below, and we closed around $14,990. So, as long as it stays below $15,246, I believe the downward pressure continues. You're aware it has formed 3 peaks up there. But if it breaks above, especially if it clears that $15,246 level, the scenario changes. It might push the movement further, possibly inflating the bubble for a little longer. However, if it closes below $14,886, and if the downturn accelerates, it won't be a gentle descent, it will be quite sharp. On the weekly chart, my trend following level is $15,164. I mentioned this last week on the show. It might test that level and could give you a chance for short positions or bearish trades if it fails to close above that. We closed below $15,000, and unless it reclaims that level and manages to close above it on a weekly basis, this week offers a favorable environment for a downward move. We will closely monitor this. In the S&P 500, our trend level is $4,385. We went there, but we closed below it last Friday, indicating a reversal. I'm negative if it stays below $4,385. Above this level, this could potentially turn positive and may continue until the end of the year, but based on the current conditions, it seems something will go wrong within the next week or two. The setup is suitable for a downside movement, and we will watch it very closely. In the Dow Jones, it's at $33,820. I'm still keeping that trend level from last week. It went there and came back, but it closed below it. My year-end closing level is $33,147, and as you can see, I've drawn that line there. So overall, this year hasn't seen much action in the Dow Jones. It went back and forth, but in the end, it's only slightly above that level. Investing in Dow Jones with its 30 companies this year wouldn't have made much sense. You should be actively trading in this market. Apple is the world's largest company, and they continue to support it. We closed just below $182, with my trend following level being slightly below that. As long as it stays below that level, the direction is down. Like Nasdaq, there are 3 peaks just above $182. If it breaks through, we might see a new high. But my base scenario is still that a reversal has started from here. However, I must inform you that if it closes above $182, from a technical perspective, a new high is likely. In Tesla, there are peaks forming, an interesting triangle. It could evolve in either direction. It recently tilted downwards, but there's a crucial support level around $247. It started heading toward it, closing at $250 and $251. My trend following level is below $261. If it stays below that, the chances of a downward movement increase. There's a possibility of a triple top here, but if it breaks above $261 without closing below $247, the triangle will likely head upwards. I'm keeping an eye on both directions. The chart hasn't produced a clear sell signal yet, but a closure below $247 is required for a complete breakdown. Nvidia has its own set of issues. There's a pending accounting scandal, and sooner or later this scandal will come to light. There's a substantial problem here, and I've shared a detailed analysis, which some of you who closely follow me might remember. I shared an article by a famous international trader, discussing the resemblance of this situation to the Enron scandal and the accounting games being played. We need to wait and see when the American SEC decides to deal with this and protect investors, as these bubbles could cause significant harm to people and the broader economy. Unfortunately, there are some problems in various parts of the world. My trend following level is $476. As long as it remains below this level, I'm leaning towards a downward scenario. I see a well-defined head and shoulders pattern or, more precisely, a triple top forming. However, the movement needs to take shape a bit more, particularly by breaking the neckline, for a clear downward trend. $476 above could potentially shift the direction, but I'd advise against making a bullish bet. Instead, you might consider trading options, especially with puts. This way, you can navigate a stock's movement up or down, and it can be less risky than directly shorting or trading the stock. In the options market, you can use puts to potentially amplify your gains while limiting your risk to the premium you paid. Amgen has continued its positive movement over the past week. It has been showing some back and forth, but the trend is still upward. The healthcare sector, particularly biotech companies, has been performing well recently. Apart from Pfizer, which has been experiencing a downturn, other companies in the sector have been showing positive performance. Amgen is trading above $276, and as long as it stays above this level, there is a strong technical trend. For those who got in at the lows, which I discussed in my videos back in July during the double bottom formation, the ride has seen some ups and downs. You can continue to track it with a stop below $276. Coterra, an energy company that deals with natural gas, has been on our radar since the beginning of the year. It has finally started to accelerate its performance to the upside. The recent breakout at $28.11 is significant, and my trend following level is set at this price. As long as it remains above $28.11, it could potentially move towards $34, if not higher. In fact, I believe it might even go past $36. The company has shown a healthy long-term trend, forming a broad bottom. Those who invested in it while it was trading around $23 or $24 are currently seeing the returns on their investments. Despite some market fluctuations, it has been performing well. Now, with the rise in natural gas prices and the positive trend in oil, the outlook is favorable. I analyze Mosaic periodically, and there's a possibility of a double bottom pattern forming. Given the ongoing global fertilizer scarcity due to the war, this company, which is a global leader in the fertilizer industry, presents an opportunity. The current price stands at $35.47. I recommend placing a stop just below that level, so if there's a daily close below $35.47, it's advisable to exit the trade. However, if the double bottom pattern works out, it could be a good trade opportunity. You can utilize call options to play the upside, which can be more advantageous since your potential loss is limited while the opportunity for gains is higher. In the world of cryptocurrencies, there was news on Friday night after the markets had closed, suggesting that the SEC would not object to Grayscale's Bitcoin ETF. This rumor circulated on social media, and it briefly pushed Bitcoin over $27,000 before it retraced. As of the time of this recording, Bitcoin was at $26,800. My current trend following level for Bitcoin is below that price. From a technical perspective, it looks bearish. However, I'm not entirely convinced, and I still consider the possibility of Bitcoin going up if there's a break to the upside, and if we don't experience a severe market downturn due to global stock markets. I am considering buying Bitcoin after it drops further and stabilizes. Regarding altcoins, they all appear to be quite negative. Ethereum, the largest altcoin, is currently at $1,517, forming what looks like a triple bottom. I remain bearish if it stays below $1,517, but my perspective will turn positive if it rises above $1,680. We are going through complex times, so please be very cautious and focus on methods to protect your investments. Diversify your portfolio and do not concentrate too heavily in one asset. Always keep a broad basket of assets to manage risks effectively. These are challenging times, so please stay vigilant. Wishing you all very cautious and profitable days.